Hey, what's going on, guys? Welcome to another episode of The Curious Cat. I want to thank my first 150 subscribers. You guys mean a lot to me. Really excited that I've been able to grow the channel to this point, even though I'm still just a tiny channel. I'm just really excited that there's some ears that are keen to listen to what I have to say. So with that being said, if you haven't already, please subscribe to the channel, like the video, share it with friends and family who might find this information useful, and help me get some of this stuff out there and grow the channel. So today I'm going to speak a little bit about what's going on with the financial market, what's going on with the money between millennials, the boomers, and Gen X. So if we look at the boomers, by the time they had reached age 39, they had accumulated 23% of the world's wealth. And then we had Gen X come along, and by the time they hit 39, they had accumulated 7%. Now we have millennials, the oldest millennial, which is me, now hit 39 years old, and we've only accumulated 2% of the world's wealth. So you can see what's going on. It's getting harder and harder for people to get wealth. And a lot of the reason for that is inflation, and it's something that a lot of people aren't talking about. There's all kinds of taxes that people are aware of. In Canada, the average tax rate is about 48% if you include your provincial and your federal tax, as well as your income tax, and then all your other taxes that you pay on gas or liquor. And now there's eco taxes, there's environmental levies, there's all these taxes which add up to an average of 48%. And then on top of that, we have the hidden tax, which is inflation. So they're devaluing our currency on top of all of that. And if you look at the charts and the numbers, they're actually devaluing it at about 5% a year. Even though they tell us inflation is below 2%, it's actually closer to 5 or even above 5% a year. So that's a big deal because you're so busy working for this currency, as I've discussed in previous videos, and the currency is just losing all of its buying power. So what that means is, for boomers, when they were our age, they were able to work, an average job, and they were able to put away money in the bank. They were able to buy a house, get a down payment, pay for a wedding, pay for the honeymoon, all that kind of stuff, in just with one year's wages. Now, a year's wages, it's basically you have to work 10 or 20 years just to save up a down payment, a minimum down payment on a highly overpriced home. So you can see most millennials haven't had that opportunity to purchase their first home, or if they did, they bought it at a really high rate, which means they're paying tremendous amounts of interest. A very small portion of that payment is actually going to the principal. Most of it is just going to interest, which goes into the hands of the bankers, and they're making all kinds of money off of you. So what this has caused is that it means that when you're working, less of the money you're earning is actually going into your pocket. Most of it is going to pay for taxes now. It's going to pay for interest on your home. Or if you haven't bought a home and you're actually just saving the cash, trying to save up, you're also just losing it through record high inflation rates. So the money's just devaluing, and you can see that if you look at home prices. Many people think that because home prices have went up a lot in the last 10 years, they think, oh, real estate's going up in value. And I've discussed this in previous videos. You can look back through some of the videos if you like. But what's actually going on is the currency itself, the Canadian dollars or the US dollars, are devaluing. So it's taking that much more of the same dollar to buy the exact same asset. So what this is doing is it's pushing real estate and stocks and a lot of these other traditional assets out of reach from most of the millennials or most of the younger generation. And then what's happening is the boomers own the bulk of the stocks, they own the bulk of the real estate, and they own a lot of the businesses, etc. So as inflation occurs, these assets rise in value because now people are wanting more of that same dollar for the underlying asset. And what that does is, if you're holding real estate or you're holding stocks, it doesn't really matter to you because the value of your home or your investment, the asset that you're invested in, follows the rise in inflation to a large extent. So these boomers that are holding a lot of real estate, they're not exposed to this inflation. They don't get screwed over like your average millennial does because they're holding assets. So their home goes up with the inflation. And then when they go and sell the home, they get a lot more of those Canadian dollars for the home than they would have if they would have just held that money in Canadian dollars. So it really gets to me. Once I understand what's going on in the financial markets, it really starts to frustrate me because boomers are always ragging on the millennials, saying we're not working hard enough and you just need to do what they did, just buy a home, get a job, tuck away money, put it into your pension. Those days are over. The boomers don't realize that times have changed and that what's traditionally worked to be successful and have prosperity in your life doesn't work anymore, because we are buying in at the top of a real estate bubble, in my opinion, and we're buying into these homes that are $500,000 to $1 million, and the interest is so high because the initial buy-in price is so high that so much of our money is going to interest to pay to have this asset, or what we think is an asset. So back in the day, a house was maybe $70,000 and the average wage was only 30% less. So they had a lot more capital to buy homes and they were much more affordable at that time. So it was much easier for boomers to acquire assets. This is my point. And now millennials, we just don't have that opportunity. Most millennials can't even get a mortgage if they wanted because they don't have. Now they want something like 20% down for your minimum down payment. Well, 20% of a $500,000 mortgage, which is kind of your entry level home here in Canada, and maybe $300,000 in the US, you're looking at between $60,000 and $100,000 down payment that's needed just to get into the market. And when we have these rising prices of everything, like food and gas and energy have all skyrocketed in cost, most people can't tuck away $10,000 even if they try. So if you do the math there, it's going to take 6 to 10 years just to get enough money to get a down payment to buy a home. And then you're buying a home that's so overvalued. People don't have any comprehension, or most people don't have any idea of how much time it's going to take to pay off $500,000, especially when even at record low interest rates, the amount of interest that's going to the bankers when you're buying something that's so expensive like this, it's over 2/3 of your mortgage payment is just going to servicing the debt. So that's just the amount of interest you're paying to the bankers, and that's at record low interest rates. And the reason it's so high is because the principal, or the amount that you're paying for this house, has gone up so much in value that it's insane. It's $500,000 is just so much money. You guys have to do the math. Like go and play with a mortgage calculator and just adjust the rates to a 60-year average, which would be 7%. And then you'll see your mortgage payments go from $2,500 up to $7,500, something like that. But you can see that the reason this whole thing hasn't collapsed is because money's never been this cheap to borrow. So people are doing the math, and when they do the math, they're thinking, oh, I can just make this payment. I may as well go for it. Owning a home has always been a great thing. And of course, we're all looking to acquire assets. So people do the math and they see that they can just afford it. So they sign on the dotted line, they sign their life away to the bankers, and they agree to basically pay off these large loans from the bankers. And what this is doing is it's essentially making you mortgage poor for most people. Most people don't have what's called cash flow positive, which means after all your payments are made on that house, including property tax, your maintenance, all your utilities, any cost and all the interest that it costs to hold that mortgage, all those are a cost of holding that mortgage. So when you factor all that in order for your house to be an asset, you need to be making more money off of that house than all of the cost associated with it combined. You need to be making that and some in order for that to be an asset. And for most people, that's just not the case. For most people, it's costing them money. They are going backwards. And the thing is that real estate's very illiquid. So, sorry, excuse me. The underlying asset could lose a lot of its value in a very short amount of time. We saw that in the '08 crash in the States, where a lot of the real estate got the values dropped in half, and then people were stuck holding these homes and paying these high mortgages. So there's a lot of stuff going on right now that no one's talking about. We're being distracted with all of this other stuff that they're trying to push down our throats in the mainstream media, like the race war, the COVID narrative, the market crash, all of this stuff, but no one's talking about the inflation and how they're devaluing these currencies and how essentially they're bankrupting the middle class. They're overinflating these assets by creating so much government currency that it's out of reach from your average middle class person. So now the millennials, they just can't afford homes. And those that did get into the market, a lot of them, in my opinion, are going to lose these homes in the upcoming crash when we go through momentary deflation. A lot of them will be stuck paying these high mortgages, and the values of the homes will get cut drastically. I'm estimating anywhere from 20 to 50%, depending on the area and how bad things get. So I believe that coming into the fall here, we're going to have another lockdown. They're going to lock things down one more time. They're going to lock the economy down under the narrative of the COVID thing because they want to bankrupt all these businesses. And the reason they want to do that, they want to bankrupt these small businesses because then these businesses are forced to sell all their assets, they're forced to sell their home, all that, and these bankers come in and get, either really low interest loans or no interest loans, and they buy up all the distressed assets. And that's the way they're creating this massive wealth transfer. And as you can see by the numbers I discussed at the beginning of this video, your average person is acquiring less and less wealth. So if you look at the millennials, by the time we're 39, we've only accumulated 2% of the world's wealth. That is a major, major issue. We essentially as millennials, we have no money. We're all broke, and most of us are financed on debt. A lot of people are holding tremendous amounts of student loan debt, car loan debt, mortgage debt, personal debt, and very little of them are actually holding cash. So that's a big problem because all of the assets have been pushed out of reach from your average investor. So that's how this major wealth transfer is going on, and it's very difficult to find a way around that. So it's very frustrating, especially as a millennial who's just getting dragged over the coals as this whole wealth transfer takes place and all the assets are pushed out of reach for us. So then we're stuck in dollars, which are devaluing, and we have very little hope of growing our capital. So that's why I really like things like Bitcoin. I hope Bitcoin takes off because I think it is a potential where a lot of the millennials are buying Bitcoin. And as the currencies devalue, and especially if we have a pension fund crisis and if real estate crashes, a lot of these boomers, as they go to retire, are going to be looking to liquidate their assets. However, there's very few millennials or new buyers that actually have capital. So I think that's how come we'll see a major deflation in the market. And that is why I think that there's going to be a major shakeout and very few people are holding cash. So I think it's going to be an opportunity. And I think a lot of the boomers might be forced to buy something like Bitcoin to hedge against inflation. And if a lot of us millennials are buying up the Bitcoin right now, then the boomers, if they want to avoid further inflation and devaluation of their currency as they sell off their assets, they're going to be forced to consider some of these alternative assets like the cryptocurrency and gold and silver. So that's why I think there's huge potential. If you look at the charts, silver looks like it's set to soar. The gold to silver ratio has started to turn around, and it's looking like it's in favor of silver. So we might see a return in silver prices. And gold has also been on the rise. Everyone knows that. Gold is at all-time highs in both US dollar and Canadian dollar. I've been telling people to buy gold for the last 10 years. Very few people listened. And now it's 5x. I've been telling people to buy gold since it was at 500 Canadian or 300 US dollars. And now we're at $2,500 Canadian and $1,800 US. And if you were holding gold, you'd be doing quite fine. But if you were holding currency, you're really feeling the pinch, as the cost of everything has been going up dramatically and everything is getting priced out of the market. So that's why I think there's huge potential for some of these alternative assets. And I'm hoping for a dip in asset prices. I'm hoping for deflation. I'm hoping that we have a debt bubble that bursts and a lot of people are forced to sell their homes and liquidate some of these excessive assets that they bought, some of the toys that they bought. You know, people buying too many boats and campers and motor homes and second, third, fourth homes, all that. I hope these people get shaken out of the market and that they start liquidating some of their stuff so that hopefully prices can deflate a little and that millennials can actually have a chance to acquire some of these assets and actually have a chance at accumulating and growing their own wealth. So with that being said, I hope you guys enjoyed the video. I hope that all makes sense to you guys. Let me know in the comments below what you guys think. I want to know what you guys are doing. Are there some alternative assets that are a little more affordable that you guys are buying? Stuff that's maybe not a $500,000 home. That's why I like silver. Anyone can go buy an ounce of silver for $17 to $25. It's not a big deal, and you can slowly tuck that away. Gold is out of reach for most people. Bitcoin is another one that anyone can buy. And other than that, I'm thinking maybe looking for some distressed businesses that come up for sale. So people that had a little too much debt out, I might be looking to purchase some small businesses, as a lot of these businesses go bust coming into the fall with the second lockdown. So those are my thoughts. Let me know your guys' thoughts. I really appreciate your attention. I hope you enjoyed the video. With that being said, God bless, have a fantastic day, and stay prosperous.